Now, the idea of investing a relatively small amount of money, say $5,000 for example, into dividend-paying stocks and or ETFs and receiving a massive amount of dividend income on a weekly, monthly, or quarterly basis seems pretty unlikely because $5,000 doesn't really seem like enough to really move the needle. Now, this is true if you're investing into the general market, say the S&P 500 for example, but if you're investing into some higher yielding options, some of the ones we're going to go through in today's video, different high yielding ETFs can offer a lot more income with as little as just $5,000 or less invested into them. So in this video for a thought experiment and just for an example, I'm going to share with you multiple different high yielding ETFs that could offer investors a relatively large amount of income consistently with just as little as $5,000 invested into them. Now this video is going to be geared towards more income focused investors that aren't necessarily super concerned with capital appreciation, but investors that do want to earn a ton of income ASAP potentially. So if this does happen to interest you at all, make sure to drop a like down below, subscribe, and let's get right into the first ETF. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, just to lay some groundwork, like I was saying earlier during the intro, the S&P 500 currently has a trailing 12-month dividend yield of 1.18%, which means with a $5,000 investment, if we were to want to see exactly how much an investor could potentially earn as far as income goes, you're only going to earn around $59 or so per year. Now, this also means that with $5,000 invested into the S&P 500, investors are only looking at around $5 per month on average on a monthly basis. Now, don't get me wrong, investors do not invest into the S&P 500 for the most part for dividend income, but just to lay some groundwork, just to have a control, I want to give you guys an idea of how little income is probably going to be earned off the S&P, but once again, not saying the S&P is used for income generation, and I'm 100% not saying that the S&P 500 is not a good option for an investment just because it doesn't offer a lot of income, but just going off of this as a control. Now, the first ETF that I think could offer investors a potential massive amount of income with just as little as $5,000 invested into it is one of my favorite high yielders. I'm talking about SPYT, the Defiance S&P 500 Income Target ETF. Now, for those of you not aware about this ETF, it says it aims to achieve a target annual income of 20% in the S&P 500 using options paid out monthly. It says it's an actively managed fund that is dedicated to generating current income, which is exactly what we're talking about in this video. Our strategy revolves around holding shares of ETFs that track the S&P performance and engaging in selling of daily credit call spreads on the index. Now, because this ETF has at least a target of a distribution rate of 20% per year, this means that with a $5,000 investment, an investor is set to receive a potential amount of $1,000 per year, or if we were to look at this on a monthly basis, $83.33 per month, which isn't necessarily going to allow anyone to quit their job or retire. But let's be real here, with just a $5,000 investment, that's pretty massive. Not to mention, SPYT has actually traded pretty good since the inception of it. It's traded more or less sideways and paid out investors like myself, because I currently hold this one, massive distributions around 33 cents more or less every single month. Now, because this ETF is new, we don't really know exactly how it's going to perform in various market conditions, but at least based off the strategy of this ETF and the performance so far, a $5,000 investment can definitely return massive income potential for investors. Now, the next ETF that could offer a massive amount of income for investors with just as little as $5,000 invested into it is one of my other favorite high yielders, ZIVB, or the -1x short VIX midterm future strategy ETF, which has a distribution rate of around 30% more or less. Now, this ETF says it aims to provide daily investment results that correspond to the daily performance of the S&P 500 VIX midterm futures inverse daily index. So basically, this ETF shorts the volatility index, which means if there's volatility, bad; if there's not volatility, good. And at least since inception, this ETF has paid investors around 48.5 cents every single month. With me being one of them, this ETF is one of my biggest payers in my portfolio and one of my favorite high yielders like I mentioned. But what's maybe even craziest is that if we go off the 29% distribution rate with a $5,000 investment, this ETF is set to pay investors, just based off of these numbers, around $1,500 per year, or if you're to look at this on a monthly basis, around $120 per month. Now again, this is not enough money necessarily to retire off of, but is $120 extra going to be helpful for a lot of investors? Maybe to pay your car insurance, maybe to pay your cell phone bill, 100% potentially. So for those reasons and more, ZIVB is definitely one of my favorite higher yielders and can definitely help investors if they want to get their income up with a relatively small amount of money invested. Another ETF that offers massive income potential with as little as just $5,000 invested into it is another one of my newer favorites. This is a weekly payer, QDTE, the Innovation 100, one-day till expiration cover call strategy ETF, which utilizes a synthetic cover call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of the Innovation 100 index. It says it's the first ETF to utilize 0 days to expiry, or ODTE, options on an innovation index, which is the Innovation 100 index, as defined in the fund's prospectus. QDTE seeks to provide overnight exposure to the Innovation 100 index and generate income each morning by selling out of the money 1 day till expiration calls in the index, and this fund is of course actively managed. This is why QDTE it offers weekly distributions. QDTE seeks to pay weekly distributions out of the sold options premium. Income potential, it seeks to generate income through a covered call strategy on the Innovation 100 index and harnesses volatility. QDTE sells 1 day till expiration options on the Innovation 100 index and seeks to exploit structural market mispricings. So that's more or less how these ETFs work. They have a very short duration option strategy, and depending on what happens in the market, of course, depending on things like volatility, there is a ton of premium to be earned, which is why these ETFs can distribute such a high distribution rate. At least that's why they've been able to do so historically. Now, this ETF pays distributions weekly, and they are sort of all over the place, but at least since inception, the distributions have been massive in my opinion. Now, how massive? We're talking around a 25-26% distribution rate, which I would consider pretty high, especially if you're also going to get a little bit of price return potentially on top of that. Now, how much money could an investor actually earn though off of a $5,000 investment into QDTE? Well, we're talking anywhere from around $1,200 to $1,300 per year, or somewhere of around $100 more or less per month in income, with just as little as $5,000 invested. Now, last but not least, another one of my favorite high yielders that an investor could potentially use to earn a massive amount of income, relatively speaking, with just as little as $5,000 invested. This is QQQI, or the NEOS Nasdaq 100 High Income ETF. Now, this ETF is one of my favorites. It gives you exposure to the Nasdaq 100 and then utilizes a data-driven call option strategy to allow you to earn a massive amount of income, which is also going to be tax efficient. I've talked about this ETF plenty of times in my videos, so definitely check out other videos if you want to deep dive into this one. But this one, like I said, offers Nasdaq 100 exposure with the use of options, which is going to give you a distribution paid monthly and a distribution rate to the tune of 14 or 15%. Now, because this ETF does offer around a 14.5% distribution rate, as of right now at least, we're talking with a $5,000 investment, somewhere around $717 per year in income, which is somewhere up around $60 or so per month. Now, again, not necessarily the highest yielding ETF across the entire market, but an ETF that offers a massive amount of income with distributions from anywhere from the upper 50-cent range all the way up to 64 cents paid out on a monthly basis for an ETF that costs somewhere up around $50 or $60 per share. So now that we went through and I shared with you guys multiple different higher yielding ETFs and proved to you that just a $5,000 investment could potentially be enough money invested to earn a substantial amount of income on a consistent basis, I lastly, most importantly, want to hear from you guys down below. When it comes to income potential, whether it's a stock, whether it's an ETF, I'm talking about higher yielding options here. What is your number one favorite across the entire market that you currently own? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.